to Evoke Ag, where we connect the global agri-food tech community. I'm Kylie Frazer, founder of Eleanor Venture. Today, we're talking about impact investing, and joining me to discuss is Sarah Nolet from Tenacious Ventures, and feeding in on Zoom is Rachel Yang from Giant Leap and AgFunder's Michael Dean. Welcome to you all. So let's get started. Rachel, Giant Leap has been one of the pioneers of impact investing since its inception. Can you just talk us through exactly what is impact investing and how it differs from other forms of investing?
Thanks, Kylie. So impact investing is really investing in assets with the intention to generate a positive social or environmental impact alongside financial return. So not trading off one for the other and looking at a way to have both. And the definition does vary depending on the investors in terms of what type of financial return they look for. But from the Giant Leap perspective, we ensure that they're blended, so impact and financial return. So we're looking for the same returns as traditional VCs.
That's really helpful. I know that one of the things that we get asked at Eleanor Venture a lot is impact investing a form of philanthropy? And it's really important to understand that this is not philanthropy. We are all here to make money. How much is up to each of us. Perhaps, Rachel, you can just talk us through a few of the portfolio companies that you have so our viewers can understand some of the companies that are suitable for impact investing.
Sure. So I might use Goterra as an example, as we've invested alongside Tenacious Ventures as well, which is really exciting. So Goterra is a business that breeds black soldier flies to consume organic waste, effectively a waste management business, and the maggots themselves get turned into livestock feed. So it's a closed loop solution to managing waste. And the impact there is really tons of organic waste diverted from landfill. So that's one example. And then, I guess the beauty of impact investing is it's a lens and not an asset class. And so the types of investments can be very varied. From the Giant Leap perspective, that's one example. But then we also have an investment called Perks, and they are a digital health platform that gamifies the process of taking a medication and treatment adherence. And so they can be quite different in the way that people look at investments from an impact investor perspective.
Fantastic. So Sarah, I hear Tenacious Ventures was one of the investors in Goterra as well. Congratulations. Thanks. What excited you about Goterra?
Yeah, we at Tenacious think about a combination of the opportunity and the founder and the business model insight that they bring. So with Goterra, we were really excited about the kind of nuanced understanding of how a biological process could help to solve a really big problem and how technology could enable that. And that wasn't obvious from the outset. And bringing those things together unlocks big value for the clients of Goterra and big impact. And so it really ticked all of the boxes for us with opportunity, company, team, business model, and impact. The way I guess we think about impact is helping agriculture transition to carbon neutral and climate change resilient future. And Goterra is squarely in the middle of that, as Rachel said, with diverting tons of organic waste from landfill and the emissions that are saved in doing so.
So Goterra is one of those great examples that's achieving the impact while delivering the financial returns.
Yeah, and that's actually one of our filters. So when we look at investing in a company, if achieving impact would be at odds with achieving returns, then we say impact isn't baked into their DNA, and so it doesn't pass our filter, because we would never want to end up with a situation where the impact is coming at expense of the returns or vice versa. We really want those things to be aligned as the company grows.
That's interesting. I think, Rachel, Giant Leap has a similar units of progress requirement for their impact investments too. Can you just talk us through what that means?
Yeah, absolutely. We have a similar notion of impact being embedded in the business model. So ensuring that it can't be stripped out when times get tough, and that it's not necessarily a kind of donation approach where some businesses and some impact investors view it to be investing in businesses that can donate a proportion of profits. Nothing wrong with that. It's just not our thesis.
Fantastic. Michael, your work at AgFunder has been amazing for the agricultural sector. How do you see the impact of impact investing? What do you see as being the correlation between impact investing and the agricultural sector more broadly?
When you think agriculture globally contributes about a quarter of greenhouse gas emissions, there's clearly a big market there, and obviously a big problem we've got to fix. If you look at the IPCC's goal of limiting global warming to 1.5 degrees above pre-industrial levels, there's a lot we've got to do to be able to achieve that. I think the current thinking is we've got to get emissions down to 45% of 2010 emission levels by 2030. So, there's an awful lot we have to do, and that sort of feeds into our thesis. Everything from robotics through to marketplaces for smallholder farmers that give access to better quality seeds that are going to allow them to use less fertilizer. Of course, on the robotic side, electric vehicles are removing emissions from the system. Vertical farming, which is becoming sort of coming into its own in many ways, particularly in markets in Asia, where we're looking at much more urbanisation, smart city type approaches, where you're looking for circular economies, where nothing's leaving the site, water is being recycled. Plastics in packaging, plastics used in agriculture. There's plant-based versions of those now. Of course, alternative proteins as well. Vegan-based meats that are coming into the market are taking animal agriculture out of the system to a degree, and certainly cutting emissions from animal agriculture. So, right across the food supply chain, there is opportunities to be impactful, and that's really exciting for us. And because agriculture is such a big market, coming back to this idea about returns being as important as the impact, I fully subscribe to that view. Investors aren't going to come to our space unless we're returning venture-type returns to them. So it's really, really important when we invest in a company that we've got an idea that it's going to be, it's swinging for the fences. It's going to be a really big deal if we can help it out and get it there.
100%. And you can see, I think, from Michael's answer, just how many opportunities there are within impact and ag tech more broadly. Rachel, can you just talk us through some of the trends that are happening, or that you see occurring in impact investing? I'm thinking more in terms of how much capital is being deployed and how investors that are inclined towards impact investing, how they're thinking about the asset class.
Sure. So impact investment is definitely a growing sector. There's a report each year produced by the Responsible Investment Association of Australasia, otherwise known as RIA. And I think they found at the end of last year, we had something like 20 billion in assets in impact specifically. And so it's a huge area which is continuing to grow. I think over the last 2 years, it's around 250% growth. So I think increasingly, as we're seeing social environmental problems become more highlighted through things like the bushfires and the pandemic that we're going through, it just shows how pressing the social environmental problems are that we have, and that we need to find solutions. And the quickest way to do that is to foster innovation for investment in startups.
Fantastic. It sounds like there's an increasing amount of capital available for startups to access, which is really exciting. Sarah, what's the best way for those startups to try and get some of that?
Yeah, it's interesting, if you're an entrepreneur that is building a company because you believe so much in the mission and the impact that you can have, it's really tempting to pitch about or explain about this big macro environmental or social problem that you're solving. And you for sure want to do that. We as investors look for that passion and the real get up out of bed every day drive to solve that problem. You also need to explain how you're going to do it. We see pitches, unfortunately, probably too frequently, that have all of the passion and the big problem, but not enough clarity on how they're actually going to solve it. And so it's much more about finding that right balance of the business model and the technology and the team that are going to tackle that problem, and telling that story without losing the passion, because both are really important. I would say, too, on Rachel's point, that just like we're seeing more capital come into this space, we're seeing more talent and founders and people from outside of agriculture come into agri-food innovation. perhaps it's because in the COVID world, we've all experienced the shock of going to the supermarket and not having something we wanted be there, or thinking about, existential questions that we might not otherwise have thought of. But we're seeing, at least here in Australia, and especially in the last 6 to 9 months, talent from other industries, founders from other spaces looking to agri-food to invest or start companies because these problems are really big and pressing and have an impact on our world, and technology and innovation is a great path to solve them. So it's a really exciting time to be in this space, even if you didn't grow up on a farm or come from this industry.
How do people that don't have a background in farming or agriculture really feel confident that they understand the problem that they're trying to solve?
Yeah, it's a tough one. I mean, I didn't grow up on a farm, and often struggle with that myself of, do I really understand the industry, or do I have the credibility? And it takes work, it takes time, it takes conversations, but entrepreneurs are really the ones that are going to do that. They're out there having those conversations, building those networks, and really asking those questions, because you might not understand the space at first, but if you're willing to put in the time to ask the questions, to do the research, to do the homework, then there's no reason you can't get up to speed on that space and climb on the shoulders of giants, so to speak. Others have probably gone before you and made mistakes. And one thing that's great about agri-food, and especially the community in Australia, is people are willing to help and willing to have that chat and give the advice or that hard lesson learned, so that maybe you don't have to make the same mistake again. So yeah, building those networks, asking those questions, and getting out there, talking to farmers, understanding the users. The more time we spend in the labs and working on the technologies, probably the less we're going to know about the problems and the business models. And so really getting out there where it's actually happening is absolutely critical.
So it's almost the same as a software company that has to be completely obsessed with their customers. It's the same approach.
Yeah, there's really no difference in agri-food, and with an impact lens even more so, understanding what's actually going to work and get that adoption, because if you don't have customers, then you can't have the impact that your business has set out to have. And to get customers, you really need to be solving their problem and speak their language, and that takes living and breathing their world and getting out and experiencing it firsthand.
Fantastic. Michael, perhaps you could give us a story from one of your portfolio companies of a founder who was just obsessed with their end user.
I'd like to think that's all of them, but there's been a few. I mean, I totally agree with what Sarah's saying. It's super crucial to understand who your customer is and what problems they're facing, and be really, really drilling in on that. We see so many sort of nice to haves and not many sort of must haves, and that's really what's going to make a business big. But yeah, pretty much all of our founders are really, really super passionate about what they're doing. One of them, Kenny Ewan at WeFarm. WeFarm is a marketplace based in East Africa, and they really started WeFarm as an information service for smallholder farmers. And the idea was that smallholders could use their app. Ubiquitous smartphone. They originally started with sort of the normal 3G, where people were texting messages to one another, but that's sort of translated now with smartphones coming on. But they really sort of wanted to understand exactly what was happening in their market in Africa. So we're talking Tanzania, Kenya, as their two foundation markets. And the idea was that farmers who experiencing the same problems in different places weren't really getting the advice they needed. There's no agronomists on the ground there, obviously, and advice is passed down through generations, quite often bad advice, and we sort of get stuck in this loop of poor yields. And so they just had this idea that they would hit the ground, they would start talking to people and really try and understand what they needed. And that was what they came up with, was this social media platform to basically talk to one another. And farmers started posting problems and taking photographs, and then others would start to engage. Fast forward a couple of years, and now they've got over 2 million active users, and they've introduced a proper marketplace where farmers are able to purchase inputs, even household goods actually, from a local trader that signed up to the platform. And that's really sort of it just accelerated crop yields, accelerated wealth in the market, because people are able to get access to better quality seed, better quality fertilizer. They're able to connect with people who can help them sell their produce. They can buy better quality household goods even. So their lives are better in many ways. So that was an example of someone who really sort of spent the time trying to drill in on exactly what was needed in the market, what was going to be useful, and what was really going to drive impact in the markets in which they're operating.
Fantastic. Thanks, Michael. Sarah, I remember a couple of years ago you got me really excited about investing in agtech in Australia in particular because some of the unique advantages that we have. Can you talk us through some of those?
Yeah, sure. So Australian agriculture is where I'd start. So we've got a number of different climatic zones. We produce pretty much anything that you can produce in the world in different areas in Australia. We have really innovative farmers. It's the second least subsidized industry in the world. So farmers are really keen adopters of technology, which is great for agtech startups. And we're in the Southern Hemisphere in an English-speaking country that's close to Asia, which means we're a great trial partner for Northern Hemisphere companies, and we have that great market access and trade partnerships into Asia. So from the agriculture side, it's a really great opportunity. And then from the ag innovation side, we've had a history of really strong agricultural research through the research and development corporations, and where we've struggled in the past is on commercialization. And what's been great in the past few years is events like Evoke Ag and the agtech ecosystem have started to grow and mature, helping to bring those research opportunities to market. And that's really the opportunity that we saw with Tenacious Ventures, was the time for a dedicated fund to bring together that capital and interest and really have an impact on that commercialization front to realize the opportunity for Australia. And so we're really proud to be playing in that space, bringing that ag side with that innovation side together and investing for impact.
Yeah, it's fantastic. You say capital and interest, but I think you're actually missing out expertise, because what you bring to the ag tech sector is really exciting, and we're all very lucky to have you.
Thanks, Kylie.
Rachel, for any other people that are watching who are excited about getting started investing in impact and ag, can you talk us through what are some good options for getting started in investing?
Sure. Well, the first thing that I recommend is that people understand what impact means to them. So impact is a lens and not an asset class. And so really understanding what degree of social or environmental impact they're looking for is a starting point. And then reaching out if they're looking for investments in startups. There are a range of angel networks. For example, Eleanor Ventures and the Impact Angel Network, which is out of the Impact Investment Group. And then there are venture capital funds and broader funds as well. So Giant Leap will be looking to raise another fund. AgFunder, I believe, has a fund as well. And there's Tenacious Ventures that has their fund too. So there are a range of funds out there that invest in ag tech startups.
Fantastic. Plenty of good options for us. Thanks for shamelessly promoting all of us, Rachel. I really appreciate it. Thanks to all our guests for their insights, and thanks so much for joining us. To listen to more great conversations, go to evokeag.com or follow us on your preferred social media channel. Bye for now.